Hello guys, good day. Welcome to another video lecture in ACC 311 Income Taxation. In this video lecture guys, we will be having a special lecture on taxation on individuals with emphasis to the option of the individual taxpayer to be taxed using 8% income tax rate. Okay, this is again in consonance with Train Law. Revenue Memorandum Order number 23 of 2018 issued on May 21, 2018 prescribes the policies, guidelines, and procedures and the availment of the 8% income tax rate option for individuals earning from self-employment and or practice of profession. So again, in the train law, effective January 1 of 2018, an individual taxpayer from earning an income from business or practice of profession may opt to use 8% income tax rate rather than to be taxed using the graduated tax table. Okay? So, income of self-employed individuals, including single proprietors, professionals, and mixed income earners is subject to the graduated tax rates. Self-employed individuals earning income purely from self-employment, business and/or practice of profession, whose gross sales and/or receipts and other non-operating income does not exceed the value-added tax threshold of 3 million pesos shall have the option to avail of the following. A. Graduated income tax rates as provided under Section 24A of the National Internal Revenue Code as amended by Train Law, or 8% tax on gross sales or receipts and other non-operating income in excess of 250,000 pesos in lieu of the graduated income tax rates and percentage tax under Section 116 of the NIRC as amended. So again, just to further explain this provision of the memorandum order, if a taxpayer is earning purely income from business or income from profession, the taxpayer has the option to choose whether to be taxed using graduated tax table or to be taxed using the 8% in lieu of the graduated tax rates and percentage tax. So again, if the taxpayer that is earning purely income from business or profession opted to use 8%, then therefore such taxpayer will no longer pay the 3% 3% tax for the business tax because again, your 8% preferential tax or 8% income tax is already in lieu of your income tax rate and your percentage tax. Okay, so in our previous video lecture, guys, on individual taxation, particularly on active income, we have presented there the format of computation for the taxable income and the computation of tax due for an individual. So, considering the same format of computation, so we have here again, if the taxpayer opted to use the graduated tax rates as an option in computing for the tax due, then therefore we just simply need to compute for the taxable income and then compute for the tax due using the tax table. Okay? And then if the taxpayer opted also to be taxed using the 8% income tax rate. Again, our tax base will be the gross sales or receipts plus non-operating other income. Okay, let me just stress this out and put an emphasis on the basis. If the taxpayer opted to use 8% income tax rate, the tax base will be the sum of gross sales or gross receipts plus your other non-operating income. Again, for taxation purposes, guys, these gross sales or gross receipts will be equal to the our accounting concept of net sales. So to compute for the tax base here in our tax concept, again, the tax concept of gross sales is equal to our accounting concept of net sales. So therefore, to compute for the tax base, if the taxpayer again opted for the 8%, it will be the sum of the net sales plus any other income, any other non-operating income. And then it will be reduced by 250,000. Again, also, let me remind you that there will only be a deduction of 250,000 if the taxpayer is a pure business or professional income earner. Deduction of 250,000 to the gross sales or gross receipts of our total basis in computing for 8% will not be allowed if the taxpayer is also at the same time a compensation income earner. Now, we have here the rules on availing 8% tax rate. In order for a taxpayer to avail the 8% tax rate, gross sales or gross receipts, again guys, gross sales and receipts is equal to our accounting concept of net sales or net receipts should not exceed the VAT threshold of 3 million, okay? It should not exceed with 3 million. Also, taxpayer must signify his intention to avail of the 8% tax rate in the first quarter of tax return. If not, he is deemed to have chosen the graduated tax rates. So again, guys, if the taxpayer is an existing taxpayer, then therefore he or she must signify his option to avail 8% on the first quarter of the year or first quarter of the taxable year. However, if the taxpayer is a new registrant, then therefore the taxpayer who is a new registrant should signify his or her option to avail 8% immediately on the first or on the initial quarter after the registration of its business. And again, the first 250,000 is not subject to tax since what is taxed is in excess of 250,000. Okay? The first 250,000 is not subject to tax since again in our train law, your 250,000 guys is zero. The tax due for your first 250,000 income is zero. But again, this 250,000 bonus is not availed, is not allowed to be deducted if the taxpayer again is a mixed income earner. Also, we have here the requisites, which your 8% option may not be available. Number one, if the taxpayer is a pure compensation income earner. So obviously, if the sole source of income for that particular taxpayer is only income from compensation, 8% is obviously not allowed to be used. VAT registered taxpayers. So obviously, guys, if the taxpayer is VAT registered, then therefore, the taxpayer will be using the graduated tax table in computing for its total income tax due, plus it will also pay 12% VAT as business income. Okay? Another is non-VAT registered whose gross receipts or sales exceeds 3 million VAT threshold. So also for those non-VAT registered, although they are not VAT registered, but if their gross sales exceeds 3 million, then therefore they will pay the 12% VAT as business tax. And those taxpayers who are subject to other percentage tax and partners of a general professional partnership are as well not allowed to use 8% income tax rate. And also those individuals enjoying tax exemptions, example, those taxpayers who are considered as barangay micro business enterprises, which are tax exempt, obviously, and all other taxpayers which are exempted by the law. Okay? Now, we also have here what if the taxpayer is a multiple income earner, meaning it has an income from compensation and at the same time it also it also has an income from practice of profession or from operation of business. So again, in this case, there will also still two options on the point of view of the taxpayer. The taxpayer can still opt to be taxed on all of its income using the graduated tax rates, or the taxpayer could still opt to use 8%. However, if the taxpayer opted to use 8%, 8% will only be applicable to its income from business or from practice of profession. So meaning if there is an option to use 8%, then there will be two set of computation. Your compensation income will be taxed using graduated tax rates, and your income from business or income from profession will be computed using your 8% income tax rate. But again, since in this case your taxpayer is a mixed income earner, you are no longer allowed, or the taxpayer is no longer entitled to deduct 250,000 in its gross sales to compute for the tax to compute for the tax base using 8% income tax. Okay, that should be very clear. Now, we have here several illustrations to illustrate further the concept of 8% income tax rate option. Okay, so we have here Mr. JMF, a financial controller of J. Jumfley Corporation, earned annual compensation in 2019 of 1.5 million inclusive of 13th month pay and other benefits. Okay, take note guys that your 13th month pay is non-taxable and all other benefits with a ceiling of 90,000. Okay? It will be further discussed in your allowable deductions or in your exclusions to gross income later on. But for the purpose of discussing the total taxable income from compensation of a taxpayer, if there are 13th month pay and other benefits, then therefore it should be tax exempt for a maximum of 90,000. But in this case, guys, in this illustration, the taxpayer has a 13th month pay and other benefits of 120,000. So therefore, only 90,000 of it will be non-taxable, okay? Only 90,000 of these 120,000 that which is 13th month pay and other benefits will be exempted. But net of mandatory contributions to SSS, PhilHealth, Pag-ibig, and Union Dues. As we all know, guys, based on our discussion in our previous video lecture, all our SSS, PhilHealth, Pag-ibig, and Union contributions of our employee are also non-taxable deductions. Aside from the employment income, the taxpayer also owns a convenience store with a gross sales of 2.4 million. His cost of sales and operating expenses are 1.1 million and 600,000 respectively, and a non-operating income of 100,000. So compute for the following. Compute for the tax due. If the taxpayer opted to be taxed at 8% income tax rate, or if the taxpayer opted to use the graduated tax rates. And letter C, let us say on February, the taxpayer tendered his resignation to concentrate on his business. His total compensation income amounted to 250,000 for the month of January, for example, and the inclusive benefits of that specific employed employment is 20,000, and his business operation for taxable year remains the same. And then at the same time, he opted for 8% income tax. So also compute for the tax due. But before we compute for the tax due, guys, let us first analyze the problem. Let us first analyze the problem whether the taxpayer is allowed to use the 8% or not. Okay, obviously, our taxpayer here is a multiple income earner because the taxpayer has a compensation income and an income from business. So therefore, if the taxpayer opted to use 8%, then therefore there will be two sets of computation. One computation for the tax due using the tax table for compensation income, and one for the computation of your 8%. But again, since the taxpayer here, guys, is a compensation income earner as well, then therefore your gross sales or gross receipts from business, or in this case, the gross sales, will no longer be reduced by 250,000. But in the first place, is our taxpayer allowed to use the 8%? Yes, it is allowed to use 8% because its gross sales is not exceeding 2.4 million, is not exceeding 3 million, because the only sum of its gross sales and its non-operating income is just 2.5 million. So therefore, its tax base does not reach or exceed 3 million. Therefore, it is allowed to use 8%. Okay, now let's compute what if the tax due, or let's compute for the tax due, what if the taxpayer uses the 8% income tax rate. Okay, we have here, if the taxpayer opted to use 8%, so again, as what I have said earlier, we need to have two sets of computation. One computation for our compensation income, because compensation income is not allowed to be computed using 8%. So we have here total compensation income, guys, of 1.5 million. This 1.5 million, guys, is inclusive. Okay, this total compensation income of 1.5 million is inclusive of our 13th month pay and other benefits of 120,000. So as what I have mentioned earlier, guys, if there is a 13th month pay and other benefits, 90,000 of it is exempted. So since there is 120,000 inclusion of 13th month pay and other benefits, then therefore we need to deduct 90,000. Okay, we need to deduct 90,000 because 90,000 of it is non-taxable. And this total compensation income of 1.5 million is also exclusive of our non-taxable mandatory contributions. So therefore, no need to deduct whatever the amount of our SSS, Pag-ibig, PhilHealth, and Union use contributions sa ato ang 1.5 million because it's already exclusive of these amounts. So in short, our total taxable compensation income is 1,410,000. Now, using this taxable income, we use the tax table to compute for the tax due of it. So we have 1,400,000, 1,410,000 belongs to the range of 800,000 to 2 million. For the first 800,000, its tax due is 130, and in excess of 80,000, 800,000 subject to 30%. So the difference, guys, of 1,410,000 and 800,000 is 610,000. So 610 times 30%, so we have 183,000 plus 130. So therefore, our tax due for the compensation income of our taxpayer is 313,000 plus the tax due of it, the tax due from its business income. So we have here, guys, the gross sales of 2.4 million, add your non-operating income of 100,000, so therefore you have a total taxable business income of 2.5 million. Again and again, it is no longer allowed to deduct 250,000 because it is assumed that that 250,000 was already claimed in your compensation income, in the computation of your tax due from compensation income. So multiply it directly by 8%, so therefore your preferential tax for, or your income from business is 200,000. You simply add your tax due from compensation and business. So therefore, your total tax due from your total income tax for your total income is 513,000. It is when the taxpayer opted to use the 8% income tax rate. Okay? Now, let's proceed. What if the taxpayer opted to use the tax table? Okay, so we don't have any problem if the taxpayer opted to use the tax table because we simply combine the taxable income from compensation and taxable income from business or profession. So we have here from our computation earlier, so we have 1,410,000 less your taxable business income. So in this case, we assume that the taxpayer opted to use the itemized deduction. Since again, the problem is silent as to how the taxpayer would claim its allowable deduction. So in this case, we assume that the taxpayer opted to use itemized deduction. So we have here total gross sales of 2.4 million minus cost of sales of 1 million, giving us a gross income of 1.4 less operating expenses of 1.6. Therefore, we have a total net income from operations of 800,000 plus your non-operating income of 100,000. So therefore, your total business income is 900,000. Add the taxable compensation income of 1,410,000. So therefore, the total taxable income of the taxpayer, again, if he opted to use the tax rates, is 2,310,000. So using the tax table, the amended section 24A, we have 2,310,000 belongs to the range of 2 million to 8 million. For the first 2 million, that is subject to 490,000 for the first 2 million. And in excess of 2 million, we have 310 subject to 32%. 310,000 times 32%, we have 99,200. So therefore, the total tax due from income or the total income tax due of the taxpayer is 589,200. Okay, 589,200. And this time, guys, I'd like you to give an emphasis on this. Since the taxpayer did not opt to use 8%, therefore the taxpayer this time will now be paying 3% other percentage tax for its business income. Okay? So since again, diba, as what we have said earlier, that your 8% option is in lieu of your graduated tax rates and your other percentage taxes or your 3% tax. So since in this case you did not opt to use 8%, then therefore you need to pay additional 3% based on your gross sales for your business tax. Okay? But again, that 3%, guys, is not part of your income, not part of your income tax. But again, for the purpose of um, computing and comparing the graduated and your 8% option, if again the taxpayer did not opt to use 8% income tax, then the taxpayer will still pay the 3% other percentage tax. Okay? So in addition to the income tax of 589,200, the taxpayer is likewise liable to pay percentage tax of 72,000, which is 3% of your 2.4 million na gross sales. Because guys, the concept here is when your business, if you are earning an income from business, that business will be subjected to business income. It's either 3% or 12%. 3% if your total gross sales is not exceeding 3 million, and then 12% VAT if your sales exceeds 3 million. So in this case, since the taxpayer again did not opt to use 8%, which is in lieu of your graduated in 3%, then therefore it will additionally pay 3%. Okay? It will additionally pay 3% of 2.4 million. Okay? So, also, we need to consider na the taxpayer is allowed to use because its total, its total gross sales was not more than 3 million or does not exceed 3 million. So obviously, if the taxpayer's gross sales is exceeding 3 million, then therefore it is not allowed to use the 8% option. Okay? I hope that that is very clear. Now this time, let's proceed. What if the taxpayer resigned from his work? Okay? Let us say the taxpayer resigned on February. Starting February, he resigned to devote time for its business. and then it only managed to earn a compensation income of 150,000. And again, guys, its non-taxable income is only 20,000. So, for example, the other income it received is 20,000. So, therefore, the entire 20,000 will be deducted to the total compensation income because, again, the threshold is 90. So, since it does not exceed with 90, so therefore, that 20,000 will be deducted in full. If you will ask, guys, where that 90 is coming from, that 90,000, guys, is according to the tax law. No, it's a standard, it's a constant figure that will be deducted if ever there is a 13th month pay or other benefits. But again, do not worry because we will have a separate discussion on the exclusions of our income. But again, in this case, since it is related to the total earnings of a taxpayer from an employee-employee relationship, we need to discuss it in advance. So since again it does not exceed 90,000, so the entire 20,000 will be deducted. So the total taxable income lang of the taxpayer from its compensation is just 130,000. So since again it the taxable income is 130,000, so therefore not over 250,000, so its tax due will be zero. Okay, its tax due will be zero. Now, we will also compute for our 8%. So, since ang option nato here is the taxpayer still uses 8% preferential income tax rate, so therefore, again, we will have to compute it by multiplying 8% to the 2.5 million. Okay, we will multiply it with the 2.5 million. Now, if you would like to ask, sir, are we not allowed to deduct the remaining um, bonus of 250,000 since the taxable compensation income is only 130 and the bonus was 250, so therefore there is still a 120 na excess of the bonus. Are we not allowed to deduct that to our taxable business income to compute for our tax base and computing for the 8% preferential tax rate? The answer is no. Again, we are not allowed to deduct any difference between the taxable compensation income if ever it is less than the 250,000 na bonus. So again, in this case, since there is a compensation income, even if it doesn't exceed or it doesn't equal to the 250,000, still the income from business will not be deducted by 250,000. So again, our tax base here will still be the sum of our gross sales and our non-operating income of 2.5 million. So 2.5 million times 8%, so we have 200,000. So in total, again, we have a total tax due of 200,000 in this case. We have 200,000. Again, that 200,000 is solely coming from our solely coming from the income of the taxpayer from business. Now let's proceed this time, guys, with the frequently asked questions with regards to our 8% income tax option. Okay, first question: the taxpayer failed to signify his intention to opt 8% income tax rate on the first quarter for existing business taxpayers or initial quarter of the taxable year after the commencement of the business for new business registrant. What is its tax implication? So, what if the problem is silent or the taxpayer failed to signify his intention to use 8%? Again, general rule, the law would assume that the option of the taxpayer is the graduated tax rates. At the beginning of each taxable year, all individuals are subjected to graduated income tax rates. Okay? Um, in absence of any stipulation, all individuals are subjected to graduated income tax rates. So therefore, the 8% income tax rate option of self-employed individual is effective only for the current taxable year when the election has been made. Okay? It is only effective on the year when the taxpayer opted to use it. And take note, it shall automatically revert back to the graduated income tax rates at the beginning of the taxable year or at the beginning of the succeeding taxable year. That means again, after a specific taxable year, in the coming taxable year, the taxpayer would need to signify again his option to use 8% unless he wants to use na the graduated tax table. Okay? So your intention to use 8% should be renewed every year. The your um, your stipulation or your intention signifying to use 8% is only applicable for one current taxable year. You need to renew your intention. You need to renew it at the beginning of the first quarter of the succeeding taxable year. Thus, the availment of the 8% income tax rate option is required to be signified and selected every taxable year, as what I am saying earlier, if the taxpayer wishes to be covered by such income tax rate. And then, the income tax rate option, once elected, shall be irrevocable, and no amendment of option shall be made for the taxable year it has been made. That means if you had started to use 8% initially at the beginning of the first quarter of the year, then therefore on the remaining quarters you are no longer to shift back to graduated. Same as well if you have opted to use the graduated tax table on the beginning of the year, then therefore on the remaining taxable quarters you are also required to again use the your first option. But again, next year you can still change depending on your option next year or next taxable year. Another question. A non-VAT taxpayer has properly signified to opt 8% income tax rate during the first quarter. Okay? It has properly signified to use 8%. However, on the third quarter, his gross receipts from business already exceeds 3 million. Okay, what is its tax implication? So that's very clear in the scenario. At the beginning of the year, it is obviously it is a non-taxpayer, so therefore it has an option to use 8% or graduated, and it's signified to use 8%. But on the third quarter, its um, gross sales exceeds the threshold of 3 million. That means it becomes a VAT taxpayer. So what is its tax implication? A non-VAT individual taxpayer who availed the 8% income tax rate and whose subsequent cumulative gross sales and or receipts exceeded the 3 million threshold during taxable year shall be liable to pay income tax under graduated income tax rates and shall be allowed a tax credit for the previous quarter's income tax payment under 8% income tax rate option. So therefore, guys, if the taxpayer immediately exceeds its income on the third quarter, then therefore on the third quarter to compute for its tax due, then therefore the taxpayer will no longer have the option to use 8%. It will revert back on using the tax table. Okay? So it will accumulate its income from first quarter, second quarter, and then third quarter to compute for the taxable income for the third quarter. And any tax due computed for the third quarter will be deducted to whatever amount it had paid from the first and second quarter using the 8% income tax rate option, okay, as a tax credit to compute for the tax payable on the third quarter. That should be clear. Another, the taxpayer should be required to update his or her registration immediately within the month following the month he or she exceeded the VAT threshold. So for example, it exceeded on um let us say on September. So on September, 1 month after, so from September to October, then there should be um, immediate update to change its status from non-VAT to VAT registered taxpayer. The taxpayer shall automatically be liable to VAT prospectively starting the day of the month following the month when the threshold is breached. So again, guys, the application of VAT is prospective. We should um, be mindful of this. VAT will be applied prospectively, meaning it will only be applicable on the first day of the month following the month when the threshold is breached. For example, again, um, your 3 million your 3 million threshold was breached on September. So automatically, on the first day of the of the next month, which is October, lang mag-start ang imuhang VAT. So it's on October lang when your VAT to will start to accrue. So that means the taxpayer shall pay the required percentage tax covering the sales or receipts and other non-operating income from the beginning of the taxable year or commencement of the business or practice of profession until the time the tax payable becomes liable or the taxpayer becomes liable to VAT. So what does it mean? So we are talking about two types of taxes here, guys. Ha, we are talking about income tax and we are talking about business tax. So we are clear earlier with regards to our income tax. We are clear earlier with our income tax na sa ato ang income tax when we compute for our income tax due for the third quarter, for example, the taxpayer will now use the graduated tax rates to compute for the tax due on its income minus any tax payments it had using 8% income tax rate from quarter 1 and from quarter 2 to compute for the total tax payable on the third quarter. We are already clear in terms of income tax. Now this time let's resolve issues on business tax. So again, since our taxpayer becomes a VAT taxpayer. So since the taxpayer is already VAT taxpayer, then that means the taxpayer is no longer allowed to use 8%. Since the taxpayer did not or is no longer allowed to use 8%, then therefore we assume that the taxpayer did not use 8% VAT. No, no. We assume that the taxpayer did not use the 8% preferential tax beginning of the year. So therefore, the taxpayer will now pay 3% percentage tax from the beginning of the year or from the start of the business or practice of profession until the time the taxpayer becomes liable to VAT. So for example, earlier, it's on September na determine ni taxpayer that it breaches the 3 million threshold. So therefore, the the time where the taxpayer is liable to pay VAT is the beginning of or the first day of the month following the month when the threshold is breached. So the threshold was breached on September, so therefore it is on the 1st of October the taxpayer becomes liable. So that means on the for the purpose of computing business tax, guys, the business tax will now equal to the percentage tax of 3% times gross sales from January 1 or from the beginning of the business or practice of profession up to September 30 plus VAT on your sales from October 1 up to December. Okay, that should be very clear. 3% from January 1 up to September 30, assuming that again the threshold was breached on September, plus the 12% VAT starting October 1 up to December 31. Okay, that should be very clear. Now, I think this is the last frequently asked question. What if or is there a chance for a VAT registered taxpayer to avail the 8% tax. Okay? Since, as we all know earlier, one of those not allowed to use the 8% preferential tax rate, guys, are those VAT registered person. So do they have a chance to use 8%? The answer is obviously yes, no? They have a chance to use 8%. But here's the case. A VAT registered person whose gross sales and or receipts for 3 consecutive years did not exceed 3 million may update his registration from VAT to non-VAT. So that means the VAT registered person will still wait for 3 years, meaning there should be 3 years consecutive that their gross sales did not exceed 3 million before they could update their registration to VAT to non-VAT registered non-VAT registered na taxpayer in order to qualify or to avail the 8% income tax rate option on or before the first quarter of a taxable year following rules and regulations on registrations, updates, verification, and other inventory cancellation of VAT invoices or receipts. So, yes, there's still a chance, pero there's a condition. Dapat there should be 3 consecutive years where gross sales is not exceeding the 3 million threshold for them to be liable to pay 12% VAT. So I think that's the end of our special lecture on individual taxation with clear emphasis on the option of 8% income tax. So again, if you still have questions regarding 8% option, then do not hesitate to be heard. Do not hesitate to be heard. So ask it during our video lecture or virtual class if you still have puzzled thoughts with regards to 8% preferential tax. So for the meantime, that's it for our video lecture. See you in our next session and be safe as always. Thank you and God bless.